Hi, I'm John Bogdasarian, President of the Promanas Group.
And I'm Brad McFarland, Vice President of the Promanas Group.
We're both real estate brokers and investors, and we're here today to introduce you to our latest investment vehicle, PF2. With over 20 years experience in the industry, we've accumulated ownership in over 2 million square feet of industrial office and warehouse space, hundreds of apartment units, as well as 20 single-family homes.
That's a lot to keep track of.
That's exactly why you're here. I started investing in real estate in the mid-1990s, and I started with nothing. I share this with you today not to impress you, but to impress upon you that we have a lot of experience and we've had a lot of successes in doing this.
In this video, we're going to tell you about PF1, which is our unique real estate investment vehicle that produces thousands of dollars each and every month for our investors.
In fact, PF1 is currently distributing $99,536 every single month. If you happen to be a member of PF1, you'd be receiving your pro rata share of those dollars. I'll be completely straight. This is not a get-rich-quick scheme.
In fact, it took us 3 years to build PF1.
Well, our investors are very happy with PF1, and PF1 has done really well. I'm not here to talk to you about PF1 today. I'm here to talk to you about PF2. That's our next opportunity. I explained PF1 because that's our track record. Now I'm going to head to my computer and walk you through the PowerPoint presentation explaining the benefits of PF2. Stay tuned. Welcome again to PF2 LLC and how this investment vehicle may be able to benefit you as an investor. This is presented by the Promanas Group, and I'm John Bogdasarian. PF2 LLC overview and benefits. The purpose of this entity is to purchase and hold positive cash flow real estate acquisitions completed by myself and Brad McFarland. Our solid track record from PF1 and our strong cash position allow us to purchase real estate assets at a substantial discount to where others are able to buy them. Our goal for PF2, similar to PF1, is to acquire solid real estate leased to stable companies with good track records and thereby create returns to investors in the form of monthly passive cash flow distributions, principal paydown of our existing debts, as well as potential appreciation of the properties that we purchase. How we differ from other real estate deal syndicators, and we differ in a number of ways. I can break down current real estate deal syndicators into about 4 different categories. The first category are what I call the old pros. These are people like my mentor, Don Chisholm, others that have been very successful. McKinley Properties is very successful. A number of these pros, I would say, or mature pros have taken their chips off the table and they no longer participate in this arena whatsoever. They've moved to cash, retired, and this isn't their cup of tea anymore. Also, we run into rookies out there. These would be younger people, probably in their 20s or 30s, that are excited about buying real estate and putting deals together, but they have no track record, and therefore it's very difficult for them to assemble money, get properties negotiated, and oftentimes sellers and listing brokers don't take them very seriously because they don't have any track record. Another category that people fit into are those that were caught in the recent downturn of the real estate market, which really commenced in 2007. Unfortunately, these folks have a very poor track record at this point because a lot of the properties they purchased, they overpaid for. Yet another category would be those that consider themselves, like we do, to be in the ideal spot. We've recently put deals together that have far exceeded investor expectations, and because we were patient and we entered the market at the right time, our track record is very solid, very stable. Banks loan to us, sellers want to sell to us, and brokers go out of the way to bring us properties because they know we'll close on those properties. The acquisition process that we go through is as follows. The first thing we do is we find assets to buy. This isn't easy, but it's something that we've been able to consistently do. We've been able to find assets that we've been able to purchase at what we believe are below market values. The next thing we do once we have the property under contract is we perform substantial due diligence on the property. If you want a complete list of our due diligence, we're welcome to share that with you at any time. It includes things like getting appraisals done, getting inspections done, doing background checks, reviewing tenant financials, reviewing leases, negotiating new leases. Once all these items are done to our satisfaction, reviewing environmental reports, checking title work, if we've determined that we like the property and all the due diligence checks out, we then present it to investors to raise the needed equity to fund the project. That's where you could potentially come in if you're interested in PF2. Next, we close the transaction. We then manage, run, operate the property, and we'll get into that a little bit further in the presentation. And then we distribute cash to our investors, free cash flow, and ultimately sales proceeds when we sell these properties. PF2 is structured on what we call a pari passu basis. Pari passu is a Latin phrase that literally means with an equal step or on equal footing. It often translates as ranking equally. An example of what that means in our entity is as follows. If you put a $100,000 investment into PF1, and let's say PF1 is capitalized with a total of $1 million, you would be a 10% owner in PF1. In this case, since it's run on what we call the pari passu basis, you would be entitled to 10% of the free cash flow, 10% of any sales proceeds from the property, 10% of the tax benefits, 10% of any losses if there were any that we could take, and obviously 10% of any and all gains or reserve accounts if they go unused. PF2 also has debt liabilities, and it's important to note that investors are not personally liable for any debts incurred by PF2 or any of its sub-entities. So if we're collecting rent on a property of say $30,000 a month and we have a $15,000 monthly mortgage payment, in the case of a tenant defaulting on their rent, the investors of PF1 would not be forced to come out of pocket to pay that mortgage payment. They're not signing personal guarantees on the debt. In some instances, investors will put investors into deals where they're putting 25% down, they're borrowing 75% from the bank, and even though an investor were to invest $1, they'd be liable for up to $3 additional of losses. In our situation, investors do not guarantee the debts of the company. Any personal guarantees needed for our loans that we obtain are guaranteed by myself, not the investors. PF2 returns. The goal with PF2 is the same as it was with PF1. We'd like to pay out at an 8% annual return distributed monthly and grow equity an additional 4% for a total potential return of 12% or more. If you invested $100,000 in PF2, ideally we'd be able to pay you at least $8,000 a year in free cash and grow your equity value an additional $4,000 annually. PF2 total cash flow is divided into our payout, what we pay out on a monthly basis, annually an 8% rate. We hold back excess cash flow as a reserve buildup to protect our money. If reserves go unused, again, those accrue to the benefit of the members. In addition, we use our cash flow to pay down debt over time, and therefore we'd have higher proceeds when we go to sell a property. This illustrates paying down debt, increasing members' potential net proceeds from the sale of a property. In all projections for PF2, it should be noted that we do not calculate appreciation of the asset as return. We consider that to be speculative and therefore just don't count it in our projections. What we do at the Promanas Group once we've acquired the asset is we collect all the rents of the property, we make any and all loan payments necessary, we establish our reserve accounts, we pay any management fees that need to be paid, and we distribute cash to our investors. We also make strategic moves, that allow us to generate total returns in the neighborhood of 12 to 14% annually. PF2 holdings, what happens with PF2 is while investors participate and buy in PF2, each asset is held in its own sub-entity. PF2 will become the 100% owner of all these sub-entities, and therefore all cash flow generated from these sub-entities will flow into PF2. Therefore, a dollar invested in PF2 is diversified across all of our holdings. Examples of potential holdings in PF2 would include office buildings, retail centers, restaurants, medical buildings, apartments, industrial properties. We are not limited to any one type of vehicle. Our philosophy is to preserve capital at all costs, continually reduce any risks associated with investing, and obtain appropriate returns in exchange for the illiquidity of real estate investments. One of the drawbacks to an investment vehicle like this is that you can't simply just sell your share ownership. I mean, you can try, but there's no real market that exists for it. So it's somewhat of an illiquid investment. Therefore, we feel higher returns are warranted. Our philosophy is to do the work once and get paid forever. If you invest in PF2, we hope to be able to pay you forever on the money that you've given to us, even after all your equity's been returned to you. What are PF1 investors saying about us? I'll let you, if you want to pause the video here and read these testimonials, you're welcome to. If you'd like additional references, feel free to contact us at any time. We have over 90 members in PF1, and we would be happy to give you any references if you have any interest. Again, PF1 is our track record for PF2. How funding works on our deals is on a first-come, first-served basis. Current PF1 members are going to have the first option to participate in PF2. That's a promise I've always made to investors along the way, is that if they fund a deal, they're always going to have the first opportunity to fund my next deal. After all current PF1 members have had this opportunity, we can then accept equity from new members or new potential members. Once the initial acquisition PF2 is funded and we've got our first deal closed, then PF2 members will always have the same first priority to add capital and fund future acquisitions if they choose to, although they are not required to. Anytime there's room available, we then go to our potential investor list and we can admit new members to PF2 at that time. Thanks again for watching the Promanas Group PF2 Potential Investor video. Please feel free to contact us at any time should you have any questions or have any interest in investing with us. I really appreciate your consideration, and I look forward to doing the best I can to increase returns and protect capital. Thanks a lot and have a great day.